How's it going, everybody? Lawrence from Financial Thing. Here, let me just adjust the volume. Today is Thursday evening. We do the live stream every Thursday. Um, if you didn't check out last week's live stream, it was Narinda Couture, CEO of Cufflink. Really good stream. We had a great chat with him, so check that out in the archives. We got a lot of good things to talk about this week. Especially, so what are we going to talk about? It's going to be a little bit peer-to-peer lending related. We're going to talk about RateSetter. I'm going to talk about Lendy, another one of the loan recoveries that saw investors taking a nice, huge hit. And we're going to have to talk about what's going on Wall Street today with Gamestop, BlackBerry, AMC Films, film theater company, Nokia, Naked Foods, and this big short squeeze that the internet warriors have created for the hedge funds and really punish them. And my thoughts on that. It's something that can't be ignored, and why this relates to what I've been saying about how important cryptocurrency is. So we're going to talk about that. And I'm kind of amazed what's going on when I started looking into this whole GameStop thing when it began happening. I've been a follower of Wall Street Bets, the Reddit forum. If you haven't checked it out, I highly recommend go check it out. You can Google it, Wall Street Bets on Reddit. Hold on. Yeah, I've been watching them for I don't know, a couple of years, and I just think it's funny what's going on with them. And the mainstream media has been bashing Wall Street Bets and saying, oh, they've market manipulation. But I got some pretty strong views on that and what's going on. But anyway, if you can do me a favor and just hit that thumbs up, that would be mostly appreciated. We're on this big push too for the Financial Thing channel to hit 1,000 subscribers. So if you can, please hit that subscribe button if you have not already done so. We're very close, 905, I think, 906 subscribers. So do me a favor, just hit that red button on the YouTube channel. If you don't have an account, create an account. Please, if you do that, highly grateful. That's, the reason why I keep pushing this subscribe plea is because YouTube takes all of the advertising from us small channels that have less than 1,000 subscribers. So we don't get any ad revenue. It's the way the corporate monster of YouTube works. They'll probably shut me down for saying that. So yes, your one subscription makes a big difference to me getting to 1,000 subscribers, and also being really able to push my message forward to more people out there. The bigger the channel gets, the more people we can really inform and help with their investing and budgeting and anything financial. So you're doing a big favor to not only myself but other people out there. Also join that Facebook group down there, the Financial Thing Facebook group. I'll go ahead and put the link in the chat. Welcome to everybody. Really glad that you're here. We'll give a quick shout out to everyone who's here. Just put in the chat. Let me know where you're speaking from, or where you're watching from, not speaking. I wish there was a way I could let you speak on here, but unfortunately there isn't yet. Yes, ES is here in, I believe, Portugal, and it's not cheating if you give a thumbs up before the stream has started. I think I did a little bit of a technical boo-boo and set the stream to start in 2 hours, so I had to go in and fix that. But thanks for everybody who was hanging out. Chris Haig is here checking in. Evening from Paul Bagworth in Mile Kenilworth. I'm going to put your comment up on here. Double D Dave Dawson, Dividend Dave Dawson from Staffordshire. We got Colin Perry from the Peak District. Peter Vince from Leatherhead. And he says it's snowy after the weekend snow. Wow. I hate to do this, but it's about 25 degrees here in Orlando today. So, yes, I knew the screen said 2 hours to the stream, but we're on now. Hi, Mike in Southampton. Colin Perry is here. Norman from a dark and mild Sussex. Hopefully you can hear me well. Just let me know in the stream if the sound is good today. Hi, Stephen, Solly Hall. We got Aki Chap here as always. Where are you from? Accrington, of course. Aki Chap. Tony Walton from rainy Somerset. We got Jackie Bennett from Chesterfield. Yes, I will. Hey, Mike, I will get under an hour today. I promise you, Sony. Yes, I'm always under an hour every week. I don't know what you're talking about. Debbie at Mixed Media Arts. I always want to say Mixed Martial Arts because, UFC and all that. Hi from the Cayman Islands. Stephen Green, hi. Nice to see you. Quick, again, flashing everybody on the screen today. John Day, hi all. Another speedy week. Yes, it's gone by so fast. Hi, Gail Leach from a chilly Bulgaria. What are you doing in Bulgaria? It sounds really freezing cold. Dave Dawson says, RateSetter. Way to go. I totally agree. Good job, RateSetter. I know I've been kind of pooing on them for a while, so I was pleased to see that. We'll talk about that. Hi, Paul Stetson. Nice to see you. We got 43 people on the stream. Please hit that thumbs up. Somebody already gave me a thumbs down. That's nice. I appreciate it. And my job is going to be to flip that thumbs down into a thumbs up because I want to make you a fan. And if you're not a fan, then I'm going to do a damn sight hardest effort to make you a fan, Mr. Thumbs Down. Alan Toombs is here. Good evening all. Missed that start as I was playing on Financial Thing Facebook. Nice to see you. I know I was commenting to some things on there today. Brian from Woburn. Well done. Nice to see. Oh, another thumbs down. Thank you very much. Give me another one. I don't mind. I like the challenge. You can give me more thumbs downs if you want. Yes, we'll talk about assets, capital, fees. Alan from Penna, first visit. Thank you for the thumbs down. I feel like you're messing with me. Thank you for liking and subscribing. Vladimir Petrov, the Vladimir Bulgarian powerlifter, is here on the road from his 18-wheeler. I don't know where. I think you're in Illinois or somewhere like that. Nice to see you, Vlad, the Bulgarian man. Colin Perry, Richard McDougall is here. David Alderman from Chiltern Hills. And Darren from Cambridge, Chimpo Naughty. We've got John Alsop from Tamworth, Staffordshire. Mike Parsons, of course, is here in Alderbury. And Richard McDougall from sunny Scotland. Paddy Gill, I can never pronounce. I'm just going to call you Paddy B.G. because I cannot pronounce your last name. Nice to see you. From France, bonjour, comment ça va? And John Morgan from a wet dreary Swindon. A nice IPA makes it better. What are you drinking? Egham B from Egham. That cannot be a coincidence that your name is Egham. Surely it's not, and you live in Egham. And Annabelle from summery Spain this week, 26 degrees. Absolutely. Yes, Richard, I could do the Scottish accent. Oh, Richard McDougall. I don't know what that was. From Scotland. Nice to see you. So yeah, let's get started. What are we gonna do first? Let's run through the peer-to-peer stuff today, so we can try to make that 1 hour deadline that I always make every week. Don't mess with me around that. Big news. So LoanPad, slow and steady as always. Nothing's really changed. I did check things out. The loan book has gone up about 100 grand, 17.7 million. Average loan to value 39%, 41 loans, 1 default, 1 extended, 4 overdue loans, average loan size 431,000. And they expect to be profitable from Q2 of 2021, which is kind of goes along with what Louis had told me even a year ago that they expected sort of spring to mid 2021 to be profitable. Thumbs up to LoanPad for continuing just to stick to what you know how to do best. Slow and steady wins the race. LoanPad doing well. Still with excellent withdrawal times if you need money out for some reason. Still less than a day to exit. Good job for them. LendingWorks, they report losses. LendingWorks has been a bit of a mystery because they've been taken over by Intriva Capital, and they still seem to be piling on these losses. And, yes, they have started lending again, but I'm treading very cautiously with LendingWorks because right now they got a total of about £9.2 million in losses. Their losses for the year ending December 2019 were 1.87 million. So their losses did decrease a little bit from 2018, but not much. There comes a time where they're going to have to make a profit. They did get a £2.5 million cash investment, cash injection from Intriva. Let's see, with further funding to be made available to make sure the company remains financially resilient and sustainable for long term to support the growth of the business over time. Unsecured lending, always a bit of an iffy thing now, especially with COVID and what's going on. Unsecured lending, I believe, will be the first one that gets hit. As far as, if you're somebody who's borrowing money, you don't have any security against that loan, whether it be a credit card or through a finance company, that's going to be the first loan that you're going to default on. You're definitely going to try to avoid defaulting on a mortgage. A credit card is going to go first. Anything unsecured. So these unsecured lenders are definitely going to feel the pinch of the COVID situation. Hopefully that turns around for them, but LendingWorks is still very much in the red. As far as my own personal investing through them, I still have money within them. I am definitely not investing anything further. I will just continue to withdraw capital payments and interest from LendingWorks for now, and unless I see something really interesting happening. But right now, it's more of just a withdrawal situation. Actually, really the same with RateSetter too. Yes, RateSetter is going to start paying investors interest again, full interest. We've got 3% in the access. This is per year for anybody that doesn't invest through RateSetter. 3.5% for the Plus product and Max 4%. I'm kind of going to go back to what I said even pre-COVID, that a RateSetter for me just doesn't really have attractive rates now. They were the first company that I actually started investing peer-to-peer lending. And it's sad, but I have to say that I found more attractive propositions in other places. I still have money with RateSetter, but not much. Do I think they're a bad company? Probably not. But again, I think that what's going to happen is they will close down their retail peer-to-peer lending at some point, just because Metro Banks is funding all of the unsecured lending, which is coming from customer deposits. And what peer-to-peer lending, lenders are funding right now is secured loans, and that's going to end up stopping. So, I can see that eventually that they're just going to stop peer-to-peer lending retail RateSetter. So who knows when? I guess it depends when they can wrap up their loan book. You can see that their loan book has actually really decreased, and we're going to run through some RateSetter statistics of their latest stats page today. See how they're doing, what their loan book size is. I'm just putting my Do Not Disturb on because getting a lot of text during the live stream. So yeah, but hats off to them for starting to pay back interest again. You will not receive prior interest because all of that money has gone to bolster the provision fund. So you're just going to start getting interest from, I think it's today, January 28th onwards. That's definitely a positive move in the right direction. So I'm happy about that, to see them doing that. And the provision fund has been topped up. We will run through. Actually, should we run through that? No, we'll run through that at the end. Assets capital, I looked this morning, and the discount was the lowest that I've ever seen. It was 0.99%. So again, if you feel like you want to exit out of RateSetter, the QAA, the quick access account, you can get out for pretty much less than a 1% discount now. Excuse me 1 second. Very much different from when we saw those numbers at 10 or 11% several months ago. And good news with assets, we're going to see that they are going to be dropping that fee, the AML fee, the management fee of 0.9% per year. That's going to be gone by June. So the last month of that will be charged will be on the May account balance, so payment ending on June. It's going to decrease over the next February. It goes down, progressively tiered down. So good news about that. It seems like these peer-to-peer lenders have got a handle on COVID's impact, and then they're going to start doing the right thing by investors and reducing those fees. So hats off to them. So really some positive news this week. What else? Twino. I don't know, for anybody that's over in Europe who invests in these Bondora, Twino, Mintos companies. Twino is, I think it's, I don't know whether you pronounce it Twino or Twino, but they are applying for investment brokerage license through Latvia's Financial and Capital Market Commission. So trying to become legit to protect investors. It doesn't really affect anybody that's based in the UK. By the way, if you are based in the UK, you can still invest through Twino. You cannot invest through Mintos at the moment, but I've never been a investor in Twino. I don't know why. I just I looked at it when I was looking at the two of them, and I opted for Mintos, not the fresh maker. I didn't really want to put too much into a European peer-to-peer company just because I felt like there was a lack of consumer protection for people that were based, in the UK. And we did see some of those European peer-to-peer companies run into trouble where you saw that lack of protection. So definitely high risk, high reward. You're getting paid some really high interest through these European companies, but the lack of protection really kind of scares me. It just doesn't make it particularly attractive. So I think anytime a company applies for regulation, it's better than them not having any regulation, even though in the UK you could say the FCA regulation doesn't really hold much water anymore. But Twino, going ahead and moving forward with that. We'll see how long that takes to them to get it. Let's go ahead and look at RateSetter statistics. I'm going to pop up on the screen here. Let's do a screen share. If you have questions too, put them in the comments. I will run through like I always do. Let's see, to screen share. I have to remember how to do this. Totally forgot. Hold on. Exit out. I always forget. Number 2. Here we go. Screen share. Alrighty. So this is currently the latest statistics that RateSetter is publishing here. We've got a 4.09 billion pounds of money that has been lent through RateSetter. So a pretty huge amount. Now, what was really interesting to me is the amount under management right now, 452 million, which is definitely a lot less than 2019. I think it was sitting about 800 million. So you've seen quite a lot of a decrease in amount under management. I honestly think that amount is just going to continue to decrease down. We can see the provision fund cash balance here at the 12,942,000. So all of those interest payments that was coming from investors' interest that should have been paid to investors was going towards the provision fund to keep everything balanced as normal. So that has risen up. And here is the expected provision fund inflows, 12,059,000. So that's obviously increasing. You can see total repayments made by borrowers, 3.6 billion pounds. Total repaid to investors, 3.8 billion pounds. Good numbers. I mean, these are huge numbers. Total interest, 194 million pounds. So, if you're an investor through RateSetter, you have seen good amounts of interest over the years. And liquidity provided, this is interesting. Just over 1 billion pounds of liquidity. That means money that has been paid out from sellouts and exits. Let's see what else. Oops, a little bit sensitive. 87,000 investors, 706,000 borrowers, 866,000 loans. And Average term of loans, 27 months. Average remaining terms outstanding loans, 17 months. This is the interest coverage right here of the provision fund. It now sits at 101%. So those are those numbers that we just actually ran through. You can see here the provision fund total buffer is sitting at an expected 25 million pounds. So you do have to kind of minus out this expected future provision fund inflows, because it's money that actually isn't in the provision fund yet, but it's expected future. And then you can see the capital coverage ratio, which means it says when the capital coverage ratio is higher than 100%, there is enough money in the provision fund to ensure that you will get back at least as much as you have put in. So that is right now at 180%. So that means everybody who's put a capital in would, if this number stays the same, get their money back, which is a good thing. Capital buffer 44.6 million pounds, and expected future losses are at 24.7 million pounds. So the provision fund is looking very, very, very good right now, which is excellent for you as a investor in RateSetter. Happy about that. That's good news. I mean, obviously, the changes that they made were changes that worked. And there was always a bit of unknown, right, about what was going to happen with RateSetter. A lot of people started to get spooked and nervous, but obviously funneling a part of the interest from investors to the provision fund in order to protect capital. And this is what you want as a peer-to-peer lender. You want your capital to be protected. You know, from companies like Lendy, Funding Secure, you've seen your capital get depleted. You don't want to have capital losses. It's like the worst case scenario for an investor, and RateSetter has protected you from actually losing capital, which is a really good thing. Colin Perry says, anyone know if there's anything going on with Funding Circle? Looking to transfer some funds out, and this is the message on the screen. ... So what is the message, Colin? Here's the message. We have paused all new lending, and you will not be able to make a new transfer at this time. Any available funds will not be lent out. If you have a standing order with us, you might want to cancel it. Yeah. So what's going on is Funding Circle is heavily focused on these government-backed CBILS loans, and peer-to-peer lenders cannot invest in those loans. So Funding Circle has essentially stopped retail peer-to-peer lending. No problem. It's just the loans they are writing, you cannot invest in as a peer-to-peer lender. Richard McDougall says, hi Lawrence, lending works to improve. Email from one of your peer-to-peer competitors tonight. Still quite positive on lending works. New investors seem to take preference over old. I don't know. My thoughts on lending works are not particularly rosy right now. I think we're going to have to wait and see what happens with them. Keep an eye on the defaults. We're going to keep an eye on the interest amounts that they're charging to borrowers. That will tell us a lot about the risk levels of the borrowers. If the APR that the borrowers are paying continues to rise or goes up really high, you're going to see riskier loans being lent out. Profitability still a concern, losing £1.8 million 2019. That's not a small sum. What is their roadmap to profitability? That would be my question. You can't keep taking a loss forever, right? Even these monstrous firms of Funding Circle and RateSetter taking losses, but they're extremely well capitalized. I don't know how well capitalized the Lending Works really is. They've gotten 2.5 mil, which is not bad, but you know, how much more is in the bank to keep them going for the next X amount of years? I don't know the answer to that question. I personally will not be putting any more into Lending Works. Yeah, and it's a shame because Lendy had really good promise. And what started to concern me is when they removed their insurance, because that was one of the big selling points. Right, we have insurance to protect against certain cases of borrower default, and then obviously that insurance was too expensive for them, and they kind of moved the needle. That was what they based their product again, and you know. Another example of a peer-to-peer lending company kind of changing its course, which of course they're free to do that, but it is annoying when you invest money into a company based on certain principles and then they remove those principles. You know, you get a bit of a thumbs down from me. Speaking of that, Dave Dawson says, mention 25 degrees again, I might give you a thumbs down. 25 degrees. And I wasn't the only one that did it. You know. Thank you for the perfect. I like that. Thanks for the thumbs down. ES says, if you want to stop making the stream less than an hour, you need to stop saying hello to everyone. That's true. Maybe I should stop saying hi. I could. I think you like the fact the stream goes over an hour. It never goes over an hour, by the way. It's always under an hour. Yeah, so RateSetter, you're right. Running the book down, absolutely. Annabelle says, more impressive RateSetter this week than Assets Capital. I think Assets doing a decent job. Yeah. Richard said, crowd property, peer-to-peer, excellent. Yes, crowd property seems to be doing really good. I like crowd property. They're creeping up on my happy, joy list. My pal, Assets Capital discount was down at 0.5%. It's gone up in the last few days. There you go. So you could get it even cheaper. Where do you find the discount rate for access accounts with assets? I can't see it or find it. So if you click on the QAA little box inside of your account, and then down at the bottom, there's a thing that says discount options. Just put a number in there. Like I always put 20 in there just to see, and it'll pop up and say, you don't need to sell for 20% discount. The discount rate is blah XXX. What else? Okay, so let's talk about Lendy. One of the loan results this week. Let me share my screen again with you. Kind of another disappointing Lendy situation. Well, I continue to just be disappointed with Lendy. I don't know. Whatever. It's just happening. Every Lendy result just seems to get worse and worse and worse and worse. But let me pull this up for you. Hold on. Leave. Oops. No. Yeah. Lendy is... Yeah, the Lendy results are just... They are what they are, right? But we saw one this week. Oh, did I just close it out? Here we go. Share percent. Yeah, so you can see this is the Whitehall's Industrial Estate loan. We had a loan value of 2.32 million pounds. I don't think you can see my screen at the moment. Hold on 1 second. Let me switch this. No, here we go. There we go. So, yeah, here we go. I'm going to get this whole live streaming down a little bit smoother too. I'm still trying to learn my way around it, so apologies. You can see the loan value is 2.32 million, 476,000 realization. This is where it gets funny, right? Lendy service fee, so they get themselves £54,576. This is a recovery, by the way, for anybody that doesn't even know what Lendy is. They're a peer-to-peer lending company in the UK that's gone into administration. This is one of their defaulted loans. They'd lent 2.32 million out. This is part of the recovery amount here. Lendy gets themselves £163,974. That's their contractual entitlement and deferred interest plus their service fee. So over £200,000 to Lendy. So out of £476,000 gross that's recovered, the lenders get £130,000. I mean, what are we talking? A little bit more than 5% for a loan value of 2.32 million. I mean, it's just, talk about criminal. This is definitely criminal. It is what it is. Hopefully this will wash out in the courts at some point, and this money that is going to Lendy will be stopped and repaid to investors. Time will tell. I think I have an account balance of 0.09p from my repayments. That's all my accounts. So it's just kind of getting to a comical point. It is painful. I know a lot of people lost a lot of money. I've lost money through this Lendy debacle. So this news continues to come in. It's crappy news. And by the way, if you're not on the Facebook group for the Lendy Action Group, definitely go join that. You can keep abreast of what's going on. It's very important to know. It's very important to know what's going on and stay updated with Lendy. But let me there we go. So yes, another crappy Lendy result. I don't know. Let me know what you think about these Lendy results, because I don't know. It's crap. It's really crappy, and I feel bad for everybody. I do. I feel bad for everybody that's invested, and it just, I don't know. I don't even want to get into it because there's absolutely nothing I can do about it other than to support the action group. Try to see what happens, but yeah. Well, anyway. You know what else we're going to do today? We're going to do a quick trading 212 update, because I haven't put out a video. I've been lazy. I'm going to record a new video tomorrow, but for everybody that's on the stream, if you've been following, I dumped £5,600 into a trading 212 account to see if I could beat the market, what the tracker funds were doing. So far, up to this point, we've been doing well. I'm going to go ahead and show you what's going on today with the portfolio live. So let's go ahead and pull that up here. Here we go. Here we go. So you can see the portfolio is just really doing well. It was over £10,000 at one point. Right now we're at £9,656 from the initial investment of £5,500. Actually went to £5,600. Somehow I put an extra £100 in there. So up 65%. These are the things that I've gotten myself into here. Some of the companies. Alteryx up 11.23%. That at one point was doing a lot better. It's sort of leveled off, but still good. Generally not a fan of cannabis stocks. Not my thing personally, but this came as a sort of a tip from an investor friend of mine who has rigorously studied these numbers. One other thing, this is not intended to be financial advice. It's just what I picked out on what's going on. So down about 3% on Aurora. JP Morgan Chase, quite happy with this. Banking stock was up over 20%, so we've seen a bit of a pullback in the markets over the last few days. 14.6% in the black. Laredo Petroleum, that's LPI, is the ticker symbol for anybody. It's a U.S. exploration gas and oil company. It's done well, up 23%. Lloyd's has pulled back a little bit, as you can see from up here. It was as high as about A little bit over 37p at one point, so back down to 33, but still up 33%. I'm not a really big fan of Lloyds Bank, but the shares were at such a discount when I bought them. They were 25.5p that I felt it's a solid business. I mean, Lloyds is a staple of the UK banking industry, and they're lending a lot of money, so it seemed like a bit of a no-brainer. This has been one of the big winners here. Magnite, they do buy sells. They're a technology company. They're involved in digital advertising, purchase and sale of digital advertising. 146% gain. I think we got really lucky with this. Happened to buy it at the right time, and it was a big percent of the portfolio. So that's done really well. Sea Unlimited too, up 40%. You can look at this Magnite chart. I mean, it's absolutely insane. If you happen to be lucky enough to get in at $8, you made yourself a ton of money. I think we got in around 18, somewhere maybe in the low 20s, because I bought a little bit and then a bit more at different prices. So that's done pretty good. Sea Unlimited, we only got one share, but still a gain is a gain, up 40%. Tesla, again, another, just happened to buy in at the right time. We're up almost 95% on the Tesla stocks. I do think Tesla is going to probably take a hit just because of what's going on Wall Street. So I've set probably some stop losses at, if that share price gets down into the $750 point, I'll probably sell off some of this Tesla. But right now it's at 844. Look, up 600%, 644%. When it split, it was down at $300. So really charging forward. Trade Desk, again, this is one of the shares that I kind of regretted selling. Up 60%. It was actually up over 100%, but took kind of a pullback. Here you can see, if we look at the last month, let's look at the 3-month chart. Pullback from 972 down to 799, so still has done well. This Tullow Oil, very small UK oil and gas exploration company, it's down 17%. Didn't have too much in that. It's more of a balance into cyclicals. I think tech is going to start to take a bit of a hit. Cyclicals, things like oil and gas, banking, probably will benefit, maybe some gold. So yeah, the portfolio has done really well. I'm kind of defeating my old message of index trackers, but honestly, it feels like at the moment it's pretty hard to lose money in the stock market unless you buy Tullow Oil and nothing else, and you would be not doing so well. But I still am a big fan. Like I said, most of my investments go into index trackers. This is very much an experiment that has worked out well so far. Quite easily could have gone the other way if we were in a bear market. I would expect this portfolio to take a much bigger hit than an index tracker would. But I'll when I record the video tomorrow on Friday, I'll put the percentage numbers up and see how we're stacked up. I expect pretty much the index tracker is going to be very much lagging this portfolio. But again, a lot of luck with market timing. Just happened to be when I bought in before some of this bull run happened. But very, very happy with it. So that's the portfolio update. So let's talk about what's going on with this situation in America with GameStop. If you don't know what's going on right now, I'll do a quick explanation because I really find it fascinating. So what's happened, there's companies out there that short sell stocks. Like we've got AMC, we've got GameStop. The reason they're short selling these companies is because what's happened is GameStop is a brick and mortar game store, and people are buying games online now. They're downloading them directly from the game developers from places like PlayStation, Sony, Xbox, and brick and mortar video game shops are just not relevant anymore. Many people expected them to go the way of the dinosaur like Blockbuster Video did. So you got these companies that are short selling these companies like GameStop, BlackBerry, Nokia, because they feel like they're companies that are not going to do well or survive in the future. Some very astute investors on the Wall Street Bets forum found that there was a company called Melvin Capital, which is a hedge fund company, and they had 100% shorted stocks on GameStop. Now, basically what this means, they basically put an all-in bet, and they had taken a massive short position on pretty much 100% of all the stocks that existed from GameStop. So what the Wall Street Bet investors did is they banded together, and when I first started looking at that forum, there was about 500,000 members, and today there's 4.7 million members on there. So collectively, they can pull money together and make some pretty damaging plays on the stock market. Now, what happened was they decided to invest in GameStop shares, and there was hundreds of thousands of shares coming from Wall Street Bet investors. They were buying these shares, and the stock price started to explode. I'm going to go ahead and show you the stock chart so you can see if you haven't been following the story. Let's go ahead and look at it. So you can see here, GameStop was pretty much just not doing anything for a long time. You can see, I think at a low point it might have been as low as $2, but you can see here, and then all of a sudden we see this little uptick, and then this is when the Wall Street Bet clan starts to get involved, and we see this price just absolutely rocket up from here. Absolutely massive gains. We got as high as $468. And what happened was, when the price started to get higher and higher and higher, these short sellers, what they do is they actually borrow the stock. They don't actually pay money for it, but they had short sold. They had taken this large position, and eventually the brokerage that they buy the stock through is going to call that position and say, hey, you bought the short at, say, $20. Now the stock price is $40, $60, $80, $90. You're going to have to cover that position. Well, what that means is, Melvin Capital would have to come out of pocket a massive amount to cover that short position. And it really put a hurting on them. They decided to close their position out when GameStop hit $90. So you could see if they'd have waited to close that position when it hit $469 or $468, probably would have bankrupted them. So they pulled the trigger, exited the trade for about 100% loss. They had to get bailed out by this company, Citadel, that injected $3 billion of cash into them to keep the hedge fund going. And the Wall Street bettors basically destroyed that trade for the hedge fund. From there, what happened was a huge amount of volatility in the trading of GameStop. You can see right here, this crash down here to $132. So a big drop from $468 to $132, and then this rise, right? Now, what I think is happening here is this drop is being caused by more short positions. So apparently some of the short sellers reloaded, and there's a lot of market manipulation going on here. The Wall Street Bet people are holding on to their stocks. But you can see these massive manipulations and what's going on in the positions, right? In the prices. In another turn of event, and this is what was really sad about the whole thing, is Robinhood, which is a big trading app, probably the equivalent of trading 212 in the UK. Robinhood said, hey, we are going to stop trading on GameStop, Nokia, BlackBerry, AMC, movie theaters, Naked Food, and all of these stocks that the Wall Street bettors are buying. Robinhood pulled those stocks from its app. And Robinhood is probably the biggest trading app in the USA. Also, other companies like TD Ameritrade, which is a big brokerage platform, paused buying on some of these stocks. So even if you owned it, you were able to sell it. But if you wanted to buy more, you couldn't, right? I mean, so what happened to free market buying and selling of stocks? Basically, these platforms screwed over the retail trader and protected the hedge funds. Now, the company Citadel that bailed out Melvin Capital has a very strong connection to Robinhood. Apparently, they pay Robinhood a ton of money for consumer data. And likely what happened is they called Robinhood and said, you need to pull GameStop from your trading platform, which Robinhood did. It prevented people buying from down here. There was people that wanted to buy more of the stock when it hit $140 or $132 to pump it back up again, and they were unable to because most of these trading people are using Robinhood, the retail investors, and it wasn't. If you actually tried to search for GameStop in Robinhood, it was completely removed, right? Which should be illegal. I mean, for them to remove a stock like that and restrict is mind-blowing to me. I just can't believe that. And so right now we're seeing this kind of hovering price, and it's a bit of a Mexican standoff between the Wall Street bet people and the hedge fund people. And the hedge fund people are trying to make the Wall Street bettors believe that there's this big sell-off. That's actually not happening. What these hedge funds do is they trade stock transactions between each other to manipulate the market. So while Wall Street bet has been manipulating the market, absolutely, they've also highlighted the sort of corruption that is happening on Wall Street. These big trading platforms being able to pull these stocks out of their platforms so people can't buy them just goes to show how corrupt Wall Street really is. All Wall Street Bets has done is shown this corruption in its true form. The media has been coming down on Wall Street Bets for doing what they've done. The SEC and the U.S. government has been looking into it, of course, because they want to protect the money. They're going to protect Wall Street. So basically the whole game is rigged. And it's really a very sad thing. If you look at what happened with BlackBerry, same thing. Same exact thing. Nothing really happening here. And then boom, you see this big spike. This is just exploitation of Wall Street bets, making themselves millions. Nokia stock, same thing. Look at here, we got the spikes. Market manipulation. AMC, here we go. Same thing. Here's the spike. Pretty amazing. And it just goes to show you, if you think that the stock market is fair, this is the type of manipulation that happens all the time. The hedge funds have been manipulating stock prices like this for as long as hedge funds have been around. Wall Street Bets has shown how easy it is to manipulate the market. And it's also taken a position advantage in saying, we see a company putting out themselves at big risk, which is what the hedge fund did. They went all in on a short that they thought was a sure thing. It turned out not to be. And they basically screwed themselves. So all of those millionaires and billionaire hedge fund, suits that are in there making all this money, laughing all the way to the bank, screwed themselves. And Wall Street Bets really said, hey, we're doing this for the little people. The guys that have $1,000 to invest. They were buying options and taking big risks too, but they weren't risking a lot of money. These hedge fund companies were risking a ton, and that's why you saw Melvin Capital have this 100% loss. So we got a lot of corruption going on, a lot of market manipulation. This is the reason why I've said, hey, I think that you better start paying attention to cryptocurrency, because this is a market that is quite difficult to manipulate, right? If a company like Melvin Capital shorts as many shares as are available, they can have big manipulation swings on that stock price. Can't do that with cryptocurrency. Cryptocurrency is demand and supply, unregulated. A lot of people have been saying on the Financial Thing group, well, I don't really think that cryptocurrency is a viable form of investing and blah, blah, blah. If you think that the stock market is a place that's fair or plays into your favor, this goes to show you today of what's happened and this information that's come out, that there is no fair play in the stock market. And it's one of the reasons I buy index tracker funds, because I believe that it's a lot. You can't really manipulate the entire NASDAQ or the entire S&P 500. You'll see today the S&P and the NASDAQ were up. What are we talking about? I don't know how much it is. I saw it in the green today. Very hard to manipulate an entire market, but you can definitely manipulate single stocks. That's why single stocks are very risky. And that's why I tend not to invest in them, because of this type of corruption that happened today with GameStop, what happened with Robinhood. This stock will eventually tank back down to zero. When the Wall Street bets people pull out and sell, the price is going to fall. Thing is, they're not selling. They are determined to hang on. When Robinhood and these companies eventually put the stock back onto their platforms, this thing is going to go through the roof. I wouldn't be surprised if you see prices of $600-$700. That's just my opinion. Again, don't buy it based on what I'm saying, but $600-$700, maybe even $1,000. And we've seen a lot of people, like Elon Musk weighing in on this. The guy that owns the Golden State Warriors, I can't remember his name, but billionaire investor, has taken positions on GameStop, and they're basically saying, hey, two fingers up to the man, because obviously this market manipulation is not fair, and it can work both ways. So I would say Wall Street Bets has not done anything untoward. The investors there, they've just shown that as much as the hedge funds can manipulate the markets, so can they. And it's an important thing to remember. If you think that stocks are completely safe, they're not. And of course, GameStop is a very risky bet proposition, but this could happen. It could happen to other stocks. A lot harder to do when, you've got a 10 billion market cap. So it's a smaller market cap, but it would be a lot harder to do with a company like Apple. But some of those smaller companies that you might invest in out there, it can be risky. It can be risky because of this corruption and what TD Ameritrade did today and what Robinhood has done today. And you can see right now there's some class action lawsuits that have been filed. It's really sad, and it really pisses me off. Hopefully this is all going to come out in light today of what's going on. You can see here, there's a story right here. Robinhood bans GameStop, another 7 high-flying Reddit stocks. It's insane. I mean, they've banned every stock that the Wall Street bet guys have manipulated because they consider that they're too volatile and too high risk. And what they're doing, Robinhood's just protecting the Wall Street rich billionaires. That's what's going on. So that's my take on it. I'm pretty happy about Wall Street, the bet situation. I think it's cool. I think it's amazing what they've done. You may not agree with me, but that's my take on it. There's going to be a lot that's going to come to light soon, more on the situation. I'm kind of excited. I think it levels the playing field. And it just really shows how much corruption there is going on in Wall Street. It actually makes peer-to-peer lending not look like a terrible proposition. And yes, cryptocurrency has been sort of volatile. We saw Bitcoin drop down into the $30,000 range. I think that's going to be it for the drop. Personally, I bought in when it dipped down to 30,000. I don't think it's going to go. We're not going to see that big correction much below there. That's, again, my opinion. So I've been buying more Ether, more Bitcoin. I think in 10, 15 years, these prices will be high. And despite what Mr. Bailey says of the Bank in England, who is completely out of touch, by the way, he's just focusing on the volatility that exists, saying, well, you can't use Bitcoin as a payment system because it's too volatile. For now, yes, it is volatile. I don't think it'll always be like that. I think it will start to settle. So, yeah. How are we doing? 4 minutes. I'm going to try to make it under an hour. Probably not going to happen. Let's see what your comments are. Dave Lightly says, Cuffling worried me last week. How can they be 10 months late in filing their accounts, but the FCA still allows them to write new business? Narinder got on the stream last week and explained what's going on. He said they're under audit from Ernst & Young, and because of COVID, Ernst & Young is way behind. It's pretty normal. Well, no, I wouldn't say normal, but it happens where companies, get behind on their accounts. But I'm not really concerned about it. That's me. Watch the replay of last week's live stream. Hear it from the horse's mouth. And yes, the FCA, are they really that important? I don't think so. Richard McDougall says Propland very good. Yes, I went to visit them 2019. Like them. Pizza Vince says the air conditioning behind your computer is dripping again. Yeah, I don't know. There's some kind of a noise. I don't know if you can hear it or not. It seems to be faint in the background, but if you turn it up, you can probably hear it. Sorry, I don't know what it is. John Cutler, be warned, RateSetter have a trigger on withdrawals. If you exceed it, it will ask lots of anti-money laundering questions, documents, which I feel should be asked on deposit now, not withdrawal. Yeah, I don't know. I've never had that experience, so yeah. John Allsop says, must admit having second thoughts about investing with Cufflink after learning that on the stream last week too. Well, just wait till they file their accounts. There you go. Shouldn't be long. Richard said, I like Cufflink loan pad unbolted. Also spread and spread again. Then loans very wide people. Yeah, diversify, very important. I've had some questions about this on-step thing that Unbolted is launching when they're getting into property investing. Yeah, I've always kind of said that I like Unbolted because they stick to what they know. So when I first heard about that, I was thinking, they're venturing into unknown territories for them. But they seem to have a good understanding of what they're doing. It's a little bit different too. It's not really bridging lending or anything like that. It's more customer goes out, finds a house that they want to buy, they rent it back to the customer until they can buy it. So I thought it seemed like an interesting proposition, but time will tell. Natalie says, does that mean we're unlikely to get any of our money back from Funding Circle? No, that's not what it means. It just means that Funding Circle is focusing on these government-backed lending, which is actually not a bad thing for you because it means the company is going to make a lot of money off of those and keep operating. Whether you get any of your money back depends on what you loan money into. But it definitely doesn't mean that you're not getting your money back. So. I'm just reading some of your comments. If you have any questions, just pop them in the chat, and then we'll try to get wrapped up before. What time is it? 8:30. We'll try to get wrapped up before midnight. No, just kidding. Just kidding. Shouldn't be too much longer. Fickle bunch, yes. Cufflink said their accounts were delayed because Ernst & Young were too busy to finish them on time. Yeah, can only take what they say. Debbie says, what is your current top 5 peer-to-peer lending companies? Lots of talk in the chat today mentioning PropLend. PropLend is on I would have invested with them if I had some spare change. I like, right now, LoanPad, obviously. I think Cufflink's doing good things. Crowd Property, LendInvest, not technically peer-to-peer lending, but I put them in there because they at one point were going to be a peer-to-peer lending company. So LendInvest, Assets, Capital, doing okay. And then Blend Network, I would say, is a solid 3. Solid 5. PropLend probably coming up with number 6 if I invested through them, which I don't, but I think they got a solid offering. Let's see. AccuChap says I sent £2 from my bank account over a week ago to Coinbase Pro, but it hasn't arrived yet. Any thoughts, Lawrence? Just thought I'd test it out. Must be a backlog, I guess. I don't deposit directly into Coinbase Pro. If you watch my tutorial, I go straight into Coinbase. If hopefully you did that. I don't know. I've never sent money to Coinbase Pro. One of the things you want to check though is if you don't include your reference number that they give to you when you make deposit, it won't work, because I had that when I first signed up. I had gotten the wrong reference number and it just never came. It just, my bank account rejected it. So make sure you check that you got the right reference number when you do your bank transfer with Coinbase. Richard says, anyone invest in unbolted or an unbolted other P2P on step? Yeah, I haven't. Kind of looking more into it. I wanted to, when I first spoke to the on-step guy, I can't even remember what his name is because it was a while ago. They had only had one deal, so I prefer to kind of wait and see how the deals are, what they look like. It seemed like they were in their very early stages, but now they're getting more into their launch. Chris Chapman says, any thoughts on Money Thing? I think Money Thing is trying to do the right thing by its lenders. I think you're probably going to see some capital losses when company goes into administration. The administration fees are going to be high, but I don't think the losses will be quite as bad as things like Lendy and Funding Secure. Fingers crossed that Ed will do the right thing over there. John Day, Coinbase, still trying to sense out support regarding account opening. I did get an apology. High requests. Delay. Yeah. Mike, Gamestop is in the USA. I think they have some shops in the UK too. I think there's one on Poole High Street, if I remember, next to the railroad tracks. Unsecured peer-to-peer, surely the first to hit. Many problems. COVID, yes, I agree. Well, it depends. Property development can get hit too in the same respect. Take care, Stephen. Thanks for joining the stream. Glad you're here. Zopa got the award for being the friendliest peer-to-peer lender, so I thought that was interesting. Natalie said, do I think there'll be more GameStop style happenings? Is this a one-off? This is absolutely not a one-off. There will be more of this going on. Absolutely. It's actually been going on before GameStop. Just the media grabbed this one and really ran with it. If you want to get an idea of which is possibly happening next, go to Wall Street Bets on Reddit. What I think will probably happen is they'll get censored and shut down. We've seen a lot of censorship in the U.S. I mean, Twitter pulled the United States president's Twitter account. So they'll figure out a way, though. They're pretty savvy internet people, so it's definitely not a one-off. No, I mean, it's happened with BlackBerry, Nokia, AMC, movie theaters, Naked Foods. You're going to see it happen more. David says short selling is basically selling stocks they do not own, hoping to buy them later at a lower price. Exactly. And they really got shafted with that short trade. Yeah, Mike says this kind of transaction is not new. People have been ramping stock forever. It's just usually market players trying to dupe rather than BBMs doing it. Yep, that's exactly right. It's usually the institutions that are manipulating stock prices. It just has come to light how uh, easy it is for the retail investors to band together and really manipulate stock prices. So, John says, not my bag, but do these traders spend all day in front of the screen? They tend to set stop limits. So if they buy the stock for 100 and they think it's going to go up to 400, they'll set a stop loss at, say, 300. That way the trade gets executed. Now, having said that, I have a friend that decided he was going to get in on some of this action yesterday. And he bought AMC and quadrupled, and then Robinhood, where he has his account, wouldn't allow him to sell out, even though he had those stop losses set. So those Robinhood companies can really screw you. There's a guy out there named Dave Portnoy who he owns a company called Barstool Sports. He tweeted this morning he was down $1 million because Robinhood would not let him sell out of AMC, I think he was in. So, don't think for a second that the platforms can't screw you over too, because they have. Yeah. Mark Burnett says, trading 212, stop trading on Gamestop. Also very interesting. Yeah. I'm surprised they haven't all banded together to do this, because Wall Street is their best friend. They're not working for the retail investors. It's how they make money. Mike Powell says, I will say the platforms were protecting the small investors, because when the bubble bursts, which like all mania it will be the small investors who take big losses and start blaming Robinhood. I disagree, Mike. Respectfully, I'll say that the platforms are doing what's best for their connections with the hedge funds. Robinhood, high level of connection with Citadel, and these market players, not just Citadel, other hedge funds too, other billion-dollar hedge funds that were probably shorting GameStop, have put a lot of pressure, and also the SEC has put pressure on these platforms to remove them. But again, you start doing stuff like that, you taking the free out of free market trading. It's kind of outrageous. I mean, that's my take on it. You see, they will present it like they're trying to protect the small people, but how you protect? You're not protecting the small people. Actually, what you're doing is screwing over people that actually own the stock and who couldn't sell it because the platform wasn't allowing you to sell it. So they incurred massive losses. Some of these people, like Dave Portnoy, $1 million in the hole because he couldn't execute his sale. Mark says, can you give me more info on your tracker funds? Appreciate you taking the time to do this. Thank you. Very, very my pleasure, Mark. Yes, I can. My main tracker fund is the Vanguard US Equity Index Tracker. You can buy it. I recommend buying it directly through Vanguard itself. It's cheap. The fees are super low. Very tax efficient fund. Owns a basket of 3,600 stocks, including all of your major stocks like Apple, Tesla, all the way down to small market cap stocks. Owns the entire broad market S&P 500, NASDAQ, and the Dow Jones. You can also do the Fidelity World Tracker too. I think is a good product if you want some outside the U.S. exposure. And I do the Vanguard Global Bond Index Fund just for some hedge insurance against a market correction. You're not going to make a ton of money off it. But should the market correct backwards, it's going to give you some hedge protection from a decline. And what you can do is move some of your money from the bonds into equities when you see another market correction. So again, Vanguard US Equity Fund through Vanguard directly. Oh, let's see. Mike Powell says, when GameStop goes bust, which has to be a possibility as it's loss-making and retail is struggling in the pandemic. Yeah, it's possible. I mean, or what's going to happen is you're going to get a lot more support for GameStop because they're so in the media right now. I was reading the Wall Street Bets forum, and they're all saying, I'll never buy another video game online again. I'm going to go to GameStop and buy it. So these guys are going to support the retail. I don't know if it's going to go bust, but we'll see. Any Bitcoin price predictions for January, February? Honestly, I was thinking 50,000 by end of Feb, but starting to look like maybe not so much, maybe 40. I wouldn't be surprised to see a 20% jump. I think we're up a little bit today. I don't know what the price is. Let's have a look. I think it was up 4%, 32,580. I wouldn't be surprised to see 40,000 by beginning of February, mid-Feb. Ethereum up 4%. And the other two coins that I've been really interested in is Chainlink and Synthetics that have done well. Do your own research, learn about what they do. But to me, very interesting coins. I like them. They've done well. Am I right in thinking no new loans on RateSetter, running down loans only? I wouldn't say no new loans. That there are some new loans, but you're gonna definitely see it starting to run down. Colin said, is the dripping noise the notification sound when new messages are posted on the stream? I don't know. Maybe. Hold on. Maybe I've got some audio thing I should have muted. Let me know if the dripping noise is gone now. It could be the little pop from the message notifications. Anybody use Solidai for buying and selling crypto? Yeah, one thing too I wanted to say about, let me look at Solidai crypto. One thing too, be careful when you're buying crypto through places like Revolut, because if you cannot withdraw the coins from one of these platforms, you don't actually own the coins. You own something that is tracking the value of the coins. So what somebody like Revolut is probably doing is buying the coins on your behalf, but I don't trust that. I want to be able to get the coins out of the platform onto a hardware wallet. If you cannot get the coins out onto a hardware wallet, be very, very concerned about that. So can you transfer coins? I'm just doing a little check. Solidai. What a strange name. Solidai. Yeah, so I don't know if Solidity allows you to transfer coins, but I use Coinbase. That's been my go-to since 1906, 2016. But they are having some issues. Absolutely some problems going on there as far as customer service. Accounts are taking a long time to open up. AccuChap, isn't our version game rather than Gamestop? Don't know, I can't remember. Alan says about Solidity, it sells around 2% above the listed price, which is cheaper than some free platforms like Revolut. Yeah, so if you do it the way that I recommend you do it, you buy through Coinbase Pro, deposit through Coinbase, transfer the money from Coinbase to Coinbase Pro. You're going to pay 50p on £100. So 0.5%. So the fees are a lot less. But again, some people are having trouble with trying to open up Coinbase accounts. So Revolut or maybe this Solidity company is a company to do it through. I don't know anything about Solidity. Dave says, I'm surprised the FCA cannot stop trading a stock. Yeah, I presume you're talking about trading 212. It is ridiculous. I mean, pulling a stock from a trading platform because of what's going on. Stocks have been volatile forever. I mean, there's been thousands of cases of stocks being volatile, right? To say that it's to protect investors, that's such bullshit. It's complete BS. Because then they should be pulling penny stocks. They should be pulling OTC stocks, that are going up 100% in a day, 500% in a day. They don't do that. So that's why I call BS on this whole thing about them using an excuse that is to protect investors. It's crap. They're not doing it to protect investors. They're doing it to protect Wall Street. Paul says, what hardware wallet do you use? I recommend Trezor or Ledger. Those are two good ones. Yeah, GameStop is do yourself a favor, hop on Wall Street Bets on Reddit and read it. You'll get a lot of insight. It's pretty fun. You can get those hardware wallets from Amazon. The drip stop now that you did whatever you did. Yeah, I guess I had the system audio on, so every time the chat came on, it was like pop, pop. Sorry about that. Oliver Jones, welcome. It's a very British name, Oliver Jones. Hello, do you think it's worth storing Bitcoin with BlockFi? I don't. Personally, I store on a hardware wallet and I just leave some of it in Coinbase. What is let me look at BlockFi. There's many different ways to do it. Looks like you can get interest on your crypto if you put it in there. Interesting. Bitcoin rewards. I don't know much. I'd have to research the company, see how long they've been around for, and whether my crypto would be safe. That would be my biggest concern. What is BlockFi and how long have you been around for? They're backing the Winklevoss twins though, so BlockFi is backed by industry-leading investors including Coinbase, Morgan Creek Capital, Winklevoss Capital. If you didn't know, they were the two guys that were involved in Facebook before they launched. So, interesting BlockFi. I don't know. Looks kind of cool. I guess you can get some rewards on your Bitcoin. Problem is, so you would need, it says, you can borrow. So you can borrow against your crypto too, yeah. Looks interesting. I'll have to look more into it. Hasn't been on my radar. Pretty cool. Avoid dealing with MoonPay. It's a scam. Yeah, don't know anything about MoonPay. maybe an unnecessary risk. Yeah, just research the company and find out how your crypto is stored. What yeah, do some research on that company. I'm gonna look more into it though. Kind of cool. Oliver said, meant to buy Bitcoin back in the summer, but didn't know where to store it. Yeah, you can store it in Coinbase. I think is quite okay now, but best place, hardware wallet, but be careful. I think the best way to do it is actually to get 2 hardware wallets. Then you've got a second backup, but obviously there is an investment. So if you're a small crypto buyer, you're spending £100 on wallets, you have to think about that. But all of the storage ways have a pro and con. If you store it on a hardware wallet, you lose the password. The hardware wallet gets destroyed. You can actually transfer even if the wallet gets destroyed with a security seed key. But if you lose the key, you cannot get access to your crypto. So there is that con. And if you leave your crypto on a platform and the platform somehow something happens to it, goes out of business or gets hacked, there is that. So I think a combination of both. I like to leave some on the platform itself and then use a hardware wallet. Okay, so, oh God, 1 hour and 23 minutes. Dave says, what happens to lost cryptocurrency? Well, if you have your security seed and it's on a hardware wallet and the wallet gets destroyed, you can still get it off there. You just have to get another wallet. And then use the security seed key. So there is that. It is retrievable. But if you lose your security seed key, you are screwed. There's absolutely no way to get it back. Anyway, I'm going to wrap it up. Again, please hit that subscribe button if you can. Hit the thumbs up. I appreciate everyone sitting here and listening to me natter for 1 hour and 25 minutes. Again, we'll be back next Thursday. Plan in the future. Assets Capital. Hopefully, Stuart Law will be on. We'll do a Q&A with him. Louis from LoanPad. Louis, if you're listening, let's get you on the stream. If there's anybody else you'd like to see come on, I don't think the RateSetter guys will, but I'll try. So I'm here to bring you the information. I'm glad that everybody's here. Thank you so much. And again, join the Facebook group. Let me put up the message. Wait, where's the message? Join the Facebook group. Hit the subscribe button. Hit the like button. Support financial thing. Join, do whatever you want. Love you guys, and I'll see you next week. Take care. Everybody have a wonderful week. And enjoy your weekend. Stay COVID-free. Stay safe and stay healthy. And I'm going to put up the wrong thing here. There we go, the disclaimer. Take care, everybody. Bye.